Hey everyone, Les here from BG Trading and I hope you are well. Today is 26th of July 2023 and I'll be talking about the Australian inflation. CPI numbers was released today and it came lower than expected. In fact, the Australian inflation rate has dropped to 6% in this last quarter in comparison to 7% back in March quarter, which has immediately triggered a rally on the stock market. In fact, after 11:30, the stock market has rallied about 1% and closed the session about 0.86%. That's on the SP and SX 200. What is my expectation for interest rates from now on? The market has priced that we potentially will see interest rates on hold in June. But what is my expectations for that? And what are the sectors that could benefit from interest rates on hold once again? And finally, I will be talking about some lithium stocks as well. You know that we took stock on some core lithium this week, and I wanted to have a really quick look on lithium stocks and lithium commodity as the share prices for a lot of lithium companies has bounced early this week. So let's have a look. Just remember, this is not a financial advice, okay? So make sure you do your own research. This is just us from BG Trading sharing with you how we apply our strategies to buy and sell stocks. Also, make sure you become a member of our free Facebook community, Buy, Grow, and Sell Strategy for Share Traders. We post a lot of great quality content. We post some stock analysis, some market updates, and great conversation with our members. So make sure you sign that up free of charge for you. Now, inflation came down 6% in this quarter, in the June quarter, and has beat analyst expectation. So the forecast from the four big banks was mixed opinions. Essentially, nobody really knows anything what's gonna happen because the future is not that yet. So now, obviously, RBA is focusing to inflation. The target is still well below what it is at the moment, but the interest rates hikes, 12 interest rates hikes, has been working, and we can see the economy has been slowing down. Although unemployment rates is still very resilient, economy has slowed down. So people spending has started declining as well. And we saw through the stock market many sectors, including retail, tech stocks, growth stocks, all having its share price slashed over the last 12 months or more as a result of this monetary tightening. Now, if we're not at the peak of interest rates, we're probably very, very close. My expectation is that we are at the peak. I may be wrong on this because at the end of the day, nobody really knows. But if you look into what's happening with the bond market and what's happening with the economy itself, you probably will realize that the latest 12 interest rates hike here in Australia has started to have massive impact, and we will see further impact as a lot of mortgage holders come out of fixed interest rates. I am one of them. Some of my mortgage has just came out of fixed interest rates, and I am feeling that right now. So the domino effect will come up later this year. So things could deteriorate further, and RBA must be aware of that. And then I don't think there is need for further interest rates hike. But again, RBA never gonna come here. Philip Lowe never gonna come to the media and say that we are now. Obviously, we actually have another governor anyway. They're never gonna say that we're now done with interest rates. So interest rates is at the peak. So start spending again because inflation is under control. That's never gonna happen, and that's why I think we most likely are at the peak of interest rate once again. Really hoping and expecting RBA to put rates on hold next month once again. That would be another indicative. And then obviously they will see what's happening with inflation in July. Now, then I'm going to go through start with the S&P SX 200 chart formation here. As you can see, we normally, I'm indicating with the Heikin-Average. So this is the S&P SX 200. It's currently trading at the formal levels, which means we went through this consolidated period here, which the stock market went up and down, went up and down, went up and down. And then now finally looks like has a breakout. If we put on a weekly chart here, we'll see this very tight consolidation, and then it looks like we had a breakout today. Obviously, this breakout will be confirmed tomorrow and after tomorrow, and we need to keep an eye on what's going to happen with Fed, with interest rates in the US, as there's a Fed meeting tonight and tomorrow night. So we might see some interest rates hike again in the US, and that could directly affect probably not all the index, but potentially if there's a sell-off in the US, then most likely we'll have a sell-off here as well. Now, if the interest rates stay on hold in the US, that is going to be very beneficial for growth stock, tech stock, and retail stocks as well, because obviously if interest rates keep on hold, then potentially we have an indicative that we might reach the peak, which again, I don't think they would say anything explicit over there in the US, but we could see a mixed market reaction. And obviously S&P 500 is almost reaching its all-time high. Dow Jones is always reaching its all-time high. So we could see US market keep rising if interest rates are on hold this week. So I just really gotta keep eye on that. And if it is on hold, we'll see like growth stocks directly benefiting from that here on ASX. Let's hope that happens, because we are holding some growth stocks as well. Now, back to the daily chart. So we can see here there is a hypothetical support right here at 7,300, and looks like we might have a breakout right here. RSI looks very strong as well, and we could see the market heading towards 7,600. But again, remember, we see these massive sell-offs, really quick sell-offs. It could have all this correction here, all this rally that we had over July. We could see very quickly, and that takes only a matter of days. So we had a rally of pretty much 6%. We could see a correction right here, right quickly in 3 days, easily a 4 or 5% bounce from that. So at the moment, there's no signs of reversal, which is good. So we're not going to short or anything. We just keep exposure to the market, and let's hope that it's going to be the case that we're breaking out towards 7,600. We don't know until things happen. That's the truth. That's what happens. With the lithium, a lot of people are asking about lithium because we took stop loss at 79 cents of core lithium. I'm going to open core lithium right here for you. Let's take a look what happened. And then we had there was a huge reversal yesterday, which the stock which core lithium still closed down about 2%, but then the core lithium went up and sort of stayed above 70 cents, which is good. So like 70 cents as a strong hypothetical support level, which suggests that the share price could be testing a little bit more. There is a lot of short trader activity at the current levels, and we can see here, but this is what we call hangman. It's a classic technical analysis indicator of reversal, which came up with a huge volume. This is a good reversal. So now I'm kind of confident that the share price has found value right here. However, I have seen in past situations that the following days, the share price could still fall further towards the end of this tail here, and then after that bouncing back. The only thing that really worries me is lithium prices. Like lithium prices continues to fall, and day by day I'm checking every single day what's happening with all the indexes again in China, and we can see that the prices continues to fall, and there is to do with China doing everything necessary to bring cost of battery materials down. That include lithium, graphite, and other battery materials as well. So my expectation here is that the share price will keep bouncing around these type of levels, and potentially, if the lithium price doesn't recover, I probably will be tipping that the share price will keep going towards 60 cents again, potentially bouncing back. But if we see a further degradation of lithium prices, we might even see core lithium at 50 cents. If it truly breaks out this level here from 90 cents to 70 cents, we most likely will see core lithium going towards 50 cent level, which for me would be definitely a buy opportunity. There are some intraday trading opportunities here, which is not part of what we do at BG Trading, although some of our guys here, they do trade intradays using BGS20 strategy. So it is a strategy that you can use to trade intraday. I think the best day was yesterday. I don't think the next following days will be very positive for core lithium unless we see these guys here. Lithium markets index start going green, start sort of rising once again. Okay, at the moment everything looks positive except battery materials. So let's keep our exposure, and if as soon as we see a bounce on this, then that's when we probably gonna go in. Hope you enjoyed this video. Let us know what you think, and I'll see you next video. Bye.